Yes, all the stocks which are in news this morning in Info Edge definitely on top of our radar. Let's welcome on board then Hitesh Oberoi to chat about this QIP. Hitesh, hi, good morning. Good to have you on the show. Help us understand how is it that you're going to be using the proceeds of this 1,875 crore rupee QIP?
Well, thank you for having me on the call. What we've said, of course, and we've been saying this for a while, that we are going to use the proceeds to invest in our internal businesses, and mostly in the matrimony and real estate businesses. We are open to acquisitions and inorganic opportunities to grow, and that's what really the QIP is for.
Sure. Is there anything that you've identified when you talk about or inorganic as well as organic opportunities that you're scouting for? Anything that you may have zeroed in on for which you're going to be deploying cash?
We've not zeroed in on a target, but like I said, we are looking to sort of acquire something in the categories we operate in: jobs, real estate, matrimony, or education. So it has to be one of these four categories. The number of good companies you can acquire in these spaces in India today, you can count on the fingers of maybe two hands at max, right? So the number of targets out there are limited. Of course, we have to make the acquisition happen, and that could take anywhere between 12 to 18 months. And it's not guaranteed. So in parallel, of course, we'll continue to build. So we'll continue to invest in sales, product, technology, data science, all the stuff it will take for us to sort of move ahead in the verticals we're already present in. But if a good sort of acquisition opportunity comes our way, we want to be ready. And that's why the QIP, and that's what the funds are likely to be used for going forward.
Interesting. Hitesh, morning. Now, Zomato is also in talks with Tiger for a total investment of 200 million. Now, would you be monetizing that investment or an investment in Zomato? What's the cost at which Info Edge had put in money when it came to Zomato?
See, Info Edge was the first investor in Zomato, and we were the first investor for the first few rounds. And we're the only investor for the first few rounds. So over time, we've, of course, put in a lot of money. And we own now, I think, about 23% of Zomato. By and large, we are believers in the fact that if a company is doing well, we would like to continue to hold that stock forever. But of course, a lot will depend on how things play out. A lot will depend on what the company's needs are, what the incoming investor wants. And, we are flexible. But ideally, we would want to own more and more of companies that are doing well. And in the digital space, there aren't that many sort of companies which, companies which are growing and which are not burning a lot of money and which are leaders in their space are rare. And, we happen to be in at least two of them, Zomato and PolicyBazaar.
Okay, and talking about PolicyBazaar, reports are indicating that they're also looking for an IPO, planning to raise 150 million, valuation 3.5 billion. Would you be monetizing that? Same question on PolicyBazaar.
Well, like I said, we haven't really thought too much about it. We've been investors in both PolicyBazaar and Zomato for over a decade now. And if there's a lot of growth left in these companies, and if we believe these companies will continue to do well for a long time, there is no reason for us to exit. On the other hand, if the need of the hour is that, for some reason the incoming investor or the situation demands that we sort of exit partly, like I said, we'll be flexible. It's the dream of, every startup, it's the ultimate vindication of their business model if they IPO. But we know IPOs are not easy and take a long time.
Sure. You've also invested in Ustra, Happily Unmarried, etc. as well. What was the cost of your initial investments into these ventures? And if you have any plans of stake monetization, if you could share with us.
See, normally when we invest, we are mostly the first or second or third investor when we get in. We do early stage deals. The ticket sizes, at the early stage level are not very high. So we typically end up investing between $500,000 to maybe 3 or 4 or 5 million at max in most of the companies we invest in. And because we go in early, the valuations are very reasonable, at that stage. So it's very rare that rarely will you see us cutting $100 or $200 million checks. Mostly we end up cutting $500,000 to $5 million checks, and we end up taking about 15, 20, 30% of the company at that stage. Then, of course, over time, as the company grows, the fund it needs more funds. Other investors come in and we get diluted. That's how it's played out over the last few years. So, we've invested maybe less than $200 million in maybe the 20, 25, 30 companies we invested over the last few years. And of course, the bulk of that has gone into PolicyBazaar and Zomato. So the other investments we have, mostly we've cut between $500,000 to $5 million checks in most of them.
Hitesh, I have to ask you, in the near term, which of your three key businesses are you most bullish on? And especially because of the COVID impact that you would have on real estate as well as jobs. But would it be Naukri? Would it be 99 acres? Or is it going to be the obvious one, Matrimony?
Yeah. No, we continue to be bullish on all of them. And I'll tell you why. For different reasons, of course. See, Naukri is a very profitable business, generates a lot of cash, has a very high EBITDA margin, is a clear leader in the category in which it operates. Of course, it's been hit by COVID, and hiring has slowed down. But I'm hopeful that hiring will get back on track, if not tomorrow, maybe 2 quarters from now. And as and when that happens, Naukri will continue to sort of do very, very well. Like I said, it has a very, very high share of the market it operates in. And we are also doing a lot of things which we think will move the needle on Naukri in the times to come. We're investing in a lot of adjacent areas. We acquired IIM Jobs last year. We are building a recruitment automation solutions product. And we're doing a bunch of such things. Matrimony, of course, we are a number 3 player, but we have been the fastest growing matrimony site for a while now. Even last quarter, we grew at 13%. In the month of July, we grew at about 18-19% in matrimony. So it's a fast growing business for us, even during COVID times. And we are confident that if we bump up our investments in matrimony going forward, which is what we intend to do, we can make the business grow even faster. Right? It may lose a little bit of money in the short term, but hopefully we'll end up creating a reasonably large business for ourselves in the medium term. Real estate was the worst hit, by COVID in the months of April and May. We saw business shrink by about 70-80% in real estate, but it's also bounced back quite strongly since then. So in July, our traffic on our portals was back to 85-90% levels. And my sense is the real estate is a very city sort of centric business. So if the metros bounce back sharply, which is very likely in the months to come, we're already seeing the recovery of some sorts in Delhi, Chennai and Ahmedabad. And as the COVID situation eases in the other cities, it is very likely that 99 acres could also bounce back strongly in the next 2-3 months. But fingers crossed, never said done till it's done.
Yeah, absolutely. Okay, we'll chat again soon once you have some clear visibility on which way things are headed. But good to have you on the show, Hitesh, as always.